talk commercial real estate because, and anybody who listens to this show knows that Alex and I are really interested in commercial real estate and how it's going to play out here as we walk around cities around the country and see, half-empty buildings. Everybody's working from home here. David Steinbach joins us here. He's the CIO of Hines. Abigail, Doolittle markets reporter. She joins us as well here. We're on set here in our Bloomberg headquarters to talk commercial real estate. David, talk to us about where we are with commercial real estate. Where do you guys play? Is it office? Is it commercial? Where is it?
Yeah, so we're a global real estate investment management firm. We're in 30 countries, about 380 cities around the world, and really active both development as well as acquisition and doing things across the product types. So living and retail, and including industrial, but office as well, which is something that I know is, as you said, is top of mind for many.
Well, speaking of office, most folks out there that we talk to in the commercial real estate space, it is a asset class that they're saying some of the buildings over here on 3rd Avenue could be worth less than 10 cents on the dollar. Nobody's been willing to buy yet, but I believe that this is, at least on the credit side, you're interested.
Yeah, I mean, we definitely are. I mean, we are looking at it through a lens that's very specific on what works and what doesn't. And there's certainly a lot of things that haven't worked and things that have gone back to banks, and all those things are in the headlines and what people are thinking about when they think about office. I think you really have to peel back the layers of the onion to understand what's going on in the sector, though. And when we look down at office, you see a sector where there is a disconnect between capital and fundamentals. And the capital markets and fundamentals just are not syncing. So the best of the best projects, when you look back the last 20 years, they were only about 6% of the total inventory, but garnered about 25% of activity. And that's just because tenants want great space for their employees. They want great places for them to work. And you have a natural degradation of office, that just doesn't work over time or needs a huge capital infusion. And so it's important to be very specific of what works and what doesn't. And so that's the lens that we're looking at it through.
So what works and what doesn't?
Yeah, well, look, yeah, and I think the deeper question is what is going to work the next 10, 15 years? Because when you make an investment in real estate, obviously you have to have a longer term lens into what into how things are going to be. Because the business plans are typically 7 to 10 years, and so it's not like equities or fixed income where you trade in and out on a daily basis. And so when we look at that future lens in terms of where the sector's headed, without question, you can see some trends. Employers are needing to activate their employees, the office always housed the means of production. And as we have moved into a knowledge economy, the means of production are people, and people sit at the center. And a human-centric office is absolutely what works. I think the other really interesting thing to think about in the sector is just in my career in real estate, I've seen things shift from art to science, and data has driven that. And as things move from art to science, it creates liquidity. It creates transparency, and that transparency creates liquidity, and that liquidity creates returns. And so you can see this happen in different elements of office, like vacancy rates or other things that make office work. And I think in this next wave, productivity is going to be one of those things that today we see as an art, but data will turn it into a science. And so getting ahead of that and really having an operator lens when you look at the sector is going to be really important.
So talk to us. I'm a Wall Street guy, so I always think about how these things get financed. Talk to us about the financing market these days. Are the banks there? If not, where do you get capital?
Yeah. So look, in this last cycle, regional banks were very active in the sector, and I do think they are going to be more on the sidelines in this next chapter. I think some of the major banks are going to start getting more online than they have been. They've definitely been on more on the sidelines as well. Debt originations are down significantly, 50% by some counts. Private credit is stepping in to fill a lot of that void, and I think that will be a trend that we're going to continue to see. CMBS is also starting to reemerge, and so I think both those elements are going to be needed. I think the other thing, I think the other thing that needs to happen is what I think will happen next week with the Fed, and I think seeing where interest rates that we have topped out, and there's a psychological element to that I think the market also needs.
Well, sticking with the finance side, I believe that depending on whose numbers you look at, $1 trillion to $1.5 trillion worth of CMBS expected to be due by the end of 2025. Some of the conversations we've been having have suggested that it's going to get pushed out, extend and pretend, but at some point that all of that is going to come due. Yet you have a pretty bullish view. You are saying now is the time to get in and invest in commercial real estate. How do you reconcile reconcile those two facts? How do you think it's going to play out?
Yeah, well, look, I mean, when you look at the private sector in real estate, you have to realize there's a big disconnect between the private markets and the public markets. Public markets are always ahead, and they always price things almost perfectly with a future lens on. Private markets are always behind that curve. And so while the public markets have had a great rally, right, the last few quarters, the private markets have not. And it's been 30 months now of from the private market perspective, rising interest rate environment, 30 months. Again, I think the psychology of that's getting ready to shift next week. And I think once we hit to that point where rates actually go down, that will change a lot. And so to me, that is the signaling of a bottom. And I think that's an important metric to think about. The market will digest that. And I think there's a lot of money on the sidelines, and that money is waiting to get activated and waiting for the signals. Again, I think the Fed will give a big one next week. And I don't even think it's so much about how many basis points. It's more about the fact that rates are now headed down.
30 seconds left. You said you're globally. Where globally do you see the best opportunities?
Well, look, I mean, last year we were basically a third U.S., third Europe, third APAC, very balanced. This year, I think the U.S. will surge to be a lot of the activity that we do. I think Europe also has seen a lot of headwinds, and I think the supply chains, the war in Ukraine, there's a lot of things happening there that have made it slow go, but I think that's shifting as well. But top pick, I think, for this year, next 12 months will be the U.S., just given where it is specifically in its market cycle.
Really good stuff. Thank you so much, both of you. David Steinbach, he's CIO over at Hines, and Abigail is Doolittle, Bloomberg markets reporter, who also has a very keen eye on the commercial real estate market.